Welcome back to another weekly episode. Do keep your notifications on for further video updates on this channel. So in the last week's analysis episode, we had spoken about how market had entered a holding pattern, that is a phase where price action becomes kind of range bound, price neither goes up nor goes down. But that is actually a phase where traders and investors should again start adding to their winners or start building fresh positions. And interestingly, after the video came out last week, somewhere in the midweek, you started seeing market again moving higher, that is breaking out of its consolidation kind of a range. But this breakout, if you take note of, it actually came at a curious time. It was a time where geopolitical tensions were high in Middle East. It was a time where all the headlines were flashing warning signs, oil was showing a lot of volatility, and yet if you see the market moved higher. I won't repeat all those points because I've already covered that in the last episode, but there is a valuable lesson here for all of you. The lesson is that markets are forward looking, they are not headline driven. And again, this is something that William O'Neill, Stan Weinstein, Peter Lynch, they've all reiterated many times in their books. And it is the teachings of these legendary investors and traders that you can apply in your real life and stay away from the noise that clouds your judgment. If you go back to my X profile and check the day when things really started escalating in the Middle East, I had posted two updates. The two updates were crystal clear that this market is heading higher and any volatility will get absorbed. Again, there is no crystal ball here. It is all the teachings of William O'Neill, Stan Weinstein, and Peter Lynch, the wisdom that they have shared. These things keep repeating again and again and again. So now let us break down a few things and chart out the course that the market may take in the next coming months. The theme remains the same, that is, the market is climbing the wall of worry. And this is something you have to understand. So, this is January, February, March, April, May, June. In January, we had the President Trump ceremony, that is swearing in, a lot of uncertainty around. Federal Reserve was still stating that interest rate cuts are far away. There were a lot of Red Sea attacks that were happening in the Middle East. Crude oil was spiking. This was in Jan 25. In February 25, we had our own union budget. Inflation data in the US was not good. Ukraine Russia escalation was happening. In March, it was again, the focus was on Federal Reserve. The commentary was negative. DeepSeek was launched, that was supposedly going to derail the AI growth story in the US. Gold was staging a breakout above 2200, attracting a lot of capital. Middle East escalations were going on. In April, the Trump tariffs came in. Again, inflation numbers were not that great. Globally, all world markets reacted negatively. In May, it was again US China. There was a lot of back and forth talk going on. Tariffs were being raised. Markets were highly volatile. Earnings were exceptionally poor. And then in June, we saw Ukraine again attacking Russia, Russia attacking Ukraine, and then Iran and Israel conflict escalated beyond anyone's imagination. And yet, if you see where the market is, it has digested all the news flow and has just kept moving higher. The message here is simple. The message is that markets are always forward looking. By forward looking, I mean that the market will react at times to headlines, but eventually markets align with the long term trend. So, if you think from the market's point of view, what has happened in the last 15-20 days, there have been four broad points where the market has remained concerned. First is the war. Can it end soon? Is this a major escalation? What about nuclear war? Will businesses shut down? This is what the market is most bothered about. Are businesses going to shut down? Are they going to go bankrupt? Earnings grew at a slower pace. This was across the world. Any catalyst for improvement? Can growth return? Now, this is linked to what the Fed will do. I'll come to that in a bit. Inflation. Is the spike in oil sustainable? What is the inflation trend? Any signs of reversal? And then the Federal Reserves. What is the Fed going to do? What is the recent data that is coming out in the US market? Why US market? Because Federal Reserve, that is the Fed, is the most important central bank in the world. What about political pressure? You're seeing President Trump again and again calling out the chairman of Federal Reserve, asking him to cut interest rates. Is the Fed working with or against the government? That is, whether the Federal Reserve and government is working towards one common goal. So this is what the market is always trying to assess. When it comes to war, the only thing that matters is the businesses all over the world going to shut down? If not, then eventually market digests that news. When it comes to earnings, as soon as the Federal Reserve starts cutting interest rates, and the recent data actually quite surprisingly has been quite bullish in nature. So if this begins, this is going to have a positive impact on earnings, which will be reflected few quarters down the line. But since market is always forward looking, market tries to price that in pretty early. So that is the reason why these legends of stock market have always advised all of us to stay away from headlines. The next slide is what were technicals suggesting. If you go back to the last couple of videos also, the point about volatility that I made, that the range on daily candles were getting tighter. There were specific charts I put out of some structures that you should be targeting. Those structures in the last 7-8 days have moved up 8 to 12% because range was tightening. Whenever range tightens, that is volatility gets compressed, it is a sign that an explosive move is coming in the market. And more often than not, it comes in the direction of trend. Sometimes it backfires, but more often than not, it'll come in the direction of trend. Higher lows within that range. Again, go back to my X profile. I had posted something about Nifty Private Bank. Look at the chart that I posted. That is a structure where higher lows are forming and volatility is contracting. And now, since I posted that chart, look at what price has done. Again, it has attempted to move in the direction of trend. Here you have to recognize that sometimes your analysis will go wrong. Nobody can be right. But the thing is, you have to read what technicals are suggesting and then try to form an opinion about it. If the market breaks down, then you simply change your opinion, adjust your positions, and respect whatever the market is doing. The third is sector strength. There were pockets like banks, finance, hospitals that were quietly outperforming and again setting up. This was 2 videos back that I'd spoken about. What usually happens is that capital rotation happens in the winners. And then divergence of fear and price. This means headlines were super negative. Now suddenly headlines have again gotten positive. I want to again highlight this because these points are critical in holding your positions. And this is not something I've invented. This is again the teaching of these 3 legends if you read their books carefully. If you go back to the day where the escalation happened and look at the commentary that was being given out by certain analysts and channels, it was based more on fear than logic. So this is again something that was repeated in the 22 cycle, where 2022 cycle when Russia attacked Ukraine. It is again being repeated now, and it will again get repeated. Let's say there is some new conflict that shows up at any corner in the world. So you will have to understand this. Price was stable, and that was a sign that market is discounting the worst case scenario. So now that the news flow has again started turning positive, there is something in the market that you need to take note of. The thing is that market is starting to broaden. Broaden means breadth improvement has happened. It is still marginal, but you have to mark this as an attempt by the market to broaden its base. Now, what do I mean by this? Leaders. The leaders that were there, and I've spoken about leaders in several of my videos, they were again breaking out into new structures, that is new trending kind of structures. There are some leaders that are now going through time and price correction, especially some pockets related to defense where there is a lot of positive buildup. The second best sectors, which were oil, gas, consumption, autos, metals, are beginning to set up again. So this is good because leaders have to be backed by second best structures in the market. There are some laggards like commodities, housing, realty that are beginning to show promise. Now, realty I had also included in one of the leaders. Again, I've explained why it qualifies as one of the leaders and one of the laggards. You'll have to understand the previous video again to clear this doubt if some of you have it. And then there were some pockets like pharma, healthcare, IT that technically did not have much strength but were forming beautiful bases at 50 DMA. So as of now, the leaders, second best sectors, then the laggards, and the sectors that virtually had no strength have again started moving up. This is what is called market is broadening. Now, I would like to see more improvement happening in terms of market breadth. I'll just cover that in a bit. IT and digital is mainly moving because the improvement in US market has also started happening at a greater pace. So IT, again, as I said in the last video, in my best estimation, IT will not be a rank outperformer, but it will move along with the broader market. Now, why market depth is important? I'll just read out something which has been paraphrased from the book of William O'Neill and Stan Weinstein. We are seeing a market that's not just being carried by a handful of mega cap leaders anymore. It's broadening out in a healthy and powerful way. The strongest stocks at the top of the trend are breaking to fresh highs with conviction. But what's more telling is how the second tier leaders are now catching up, confirming the strength beneath the surface. Even sectors and stocks that were laggards for months, the chronic underperformers and massive decliners are starting to show signs of accumulation in life, staging meaningful rallies and reclaiming key levels. By key levels, mostly I mean 50 DMA, and some of these are also trying to claim 200 DMA. This kind of broad participation, that is leaders are leading, followers are strengthening, and the worst names are bottoming out is the hallmark of a robust bull phase where capital rotation supports the uptrend and fresh pockets of opportunity keep emerging. So, this is the best way that I can describe what is happening in the market today in terms of trend that is post consolidation period that we saw in the market recently. Now, since all the headlines have turned so positive, it is not that you need to drop your guard and keep buying things blindly. There are plenty of data points that you still have to worry about. And you have to take this into cognizance with respect to how you scale into your positions. For instance, I still have some decent amount of cash in my hand. If I find volatility in the market in the next 3-4 months, I'll then deploy those cash, whatever cash levels I have, into the stocks and the sectors that are making money for me. But I'll explain those data points. First is liquidity. So you have to understand that the Federal Reserve and the US government is still not on the same page. Whether it is due to political differences or something else, that I don't know and that we'll never know. But when liquidity is not in abundance in the system, you will see that bouts of volatility will continue. It will continue as liquidity is pushed and pulled from the system, and this is bound to happen. Second is tariff deadline. Do not forget that tariff deadline date is, I think, July 9th or July 15th. I don't know the exact dates. The Europe tariffs on America are also going to take effect. And again, the circus around tariffs will start soon. I say circus because every time there is a geopolitical event or something related to the policies of some governments, there is a media circus that begins. And then you will again see chameleons coming out and flipping on their opinion as price moves. Third is sentiment. Now you're suddenly seeing that optimism is back. Whether you open any US channel also or Asian channels, you'll see that the sentiment is suddenly back. Positive commentary is being given, level of all-time high, bull market, influencers are pushing through IPOs. This is again coming back. You can just sense it in the system. Remember a rule here that William O'Neill has taught: never commit a lot of money in such phases, because positive sentiment equals poor price as entry for a trader or an investor. You have to wait for volatility to come back within a larger structure of higher high, higher low to get better price as an investor in the market. Now, what is the global trend about market breadth suggesting? This market breadth data is still of Indian stock market, 80% above 50 DMA, roughly 53% above 200 DMA, 50% above. That is in a structure of higher high, higher low structure. But this trend is also visible in the US and European market, which means about 50% of stocks in the US market is performing very well. Remaining 50% is relatively still struggling. This is also the case in the European market. It is also case in our market. I haven't checked the data of other Asian markets as such, but this is a global trend. And you have to be mindful of the fact that whenever breadth is not as supportive as what the headline indices are doing, the market keeps having phases of volatility. So 4-5% kind of volatility can come from anywhere in the market. And when that happens, again, the circus will begin that will stop you from taking advantage of that volatility. This is something you have to understand if you have to do well in the stock market. That volatility is similar to we breathing in, breathing out. When market gets volatile, it shakes out a lot of short-term speculators from the system that makes it possible for price to again move higher. People are shaken out, the net longs in the market are reduced, and again market finds a way to start making higher high on charts. This is just the way market functions, and you will have to come to terms with it. So based on how I see things moving in the market, again, this is a chart that I've been sharing with you since February 2025. We are still in this up move phase. We will have a pullback in this market, whether it is to shake out the people who are coming in late, or it is just how markets are going to function. Maybe it is also a way for the market to wait for the Federal Reserve and US government to again start working together. But this pullback that will come about, this pullback will be an opportunity to add to those sectors and stocks that have started making money for you here. That is why don't try and be an investor or a trader who tries to map out or tries to time the market at lower time frames. That is not going to be possible. You will have to hold on to your winners. When this pullback happens, your winners will give back some money to the market again. Again, a base will form. Again, price will make an attempt to move higher. So use this period to trim down those positions that are not working for you, and use this period to add to those positions that are already working for you. Again, this is a rule that has been taught by Peter Lynch, Warren Buffett, Charlie Munger, Stan Weinstein, William O'Neill. that always water your flowers, cut your weed. Water your flowers, cut your weed, which means cut your loss making positions and add to your winners, because that is the only way you can nurture your investments, absorb volatility, and let your portfolio do the best for you and for your family. So, all the last week's queries were answered on YouTube and some personal questions that you had sent on Instagram. So, have a great weekend ahead. Take care and be safe.